Good morning. Welcome to this week's Market Carver. I hope you're having a wonderful September. I hope you had a great Labor Day. It was nice to see that heat subside and this cooler weather to come in, at least for me. I know some of you are getting ready to go to Florida already in the cool, but it's nice waking up in the morning and seeing some of the pretty skies as I drive back and forth to Lafayette and see some of the beauty that's out there. Wonderful looking stuff. Lots to talk about in the market, obviously, things that are going on. We know this is a seasonal challenge, always has been, always will be. Between August and mid-October is the weakest season for the stock market. Always gives you some opportunities to be able to deal with some planting, and also means you need to pay attention to some harvesting. Now here's the challenge. As tough as September normally is, we also have to deal with a fiscal cliff, sequestration. We have to deal with potential tapering from the Federal Reserve on QE. We've got to deal with the appointment of a new Fed chairman. You've got a series of issues and events that are coming together all at one time to create an interesting thing. And on top of that, we get to deal with Syria. And obviously we pray for the people that are there and for the wisdom of the leaders of the world as they try to figure out what it is they're going to do. As I'd like to say, I'm glad I'm not in their shoes. Let's start with the fundamental leg first. We'll go to PMI. Our economy is doing very, very, very well. Now, one would think that would be great news, and in all fairness, it is great news. The reason the market's not reacting to it is when you have anything above 50 on a number, it shows that you have true economic growth. Well, last month, August was the highest we've seen since June of 2011. Now, this month's came in, it's actually even higher, better than expectation. And all of that leads to the question is any more QE even necessary? When you hear the QE, think tapering, the Federal Reserve not putting as much money into the system. That will scare the stock market and we'll have a little bit of volatility there. I don't think it's going to be long term, but you will see a pullback and certainly some volatility inside of the marketplace when those words occur. I still think you're not going to see it until later this year, if not even first part of next year, but the market is starting to price in more with that great economic news, the potential of it happening here in September. So we're very much on the watch out and look for it. Moving to the technical sector, these charts can get confusing. Remember, they have nothing to do with the value, the operations, or anything else to do with the business. This is pure money flow. It gives us an idea of what's going on underneath the hood of a market. We can do these with individual companies. In this case, we're talking about the market. And you'll hear people talk about 50-day, 100-day, 200-day moving averages. Well, in this case, it's the chart of a 50-day moving average compared to the S&P 500. And what you've seen is the market work its way up. And earlier this year it failed, where the number of new companies that were above their 50-day moving average was actually falling. That's never a good sign. The market recovered, came back. This time you're starting to see the market make a new high, started to pull back here in August, and along with that, you notice the number of stocks making new highs, if you will, and are starting to really fall. And that is a telltale sign that there are some challenges that are out there that we have to pay attention to, be aware of. It's not a reason to go out and sell everything. It's just one more arrow in the quiver, one more piece that we have to be aware of as we move forward. On the institutional leg, we talk about large shares that are owned by pension funds. Well, one of the largest institutions that's actually out there is the Bill and Melinda Gates Foundation, paired with some of Warren Buffett's money, over $750 million that they have inside of one company called Waste Management. It's interesting. There's a dividend being paid of 3.5%. They've got the money there for that. But it's that trash business. And a big part of what their foundation about is really trying to take care of bad parts of the world that are challenged. One of those is very much inside of a cleanup of trash, as I've witnessed myself in Nairobi and some of the other places in the world. So it's interesting to kind of watch it, but you have to pay attention to those large blocks of stock that are held by owners that really have no way to sell them. It gives you an idea of where they think the world is really going and really heading. And as they used to say on Tony Soprano, there's a lot of money in trash. Always has been, probably always will be. Few mega telecom mergers that really impacted us this week. Obviously, you had the Vodafone that we've had for a long time, one of the European largest cell phone companies that's out there, a big part of the European culture. But they had a big stake in Verizon Wireless, and Verizon Wireless has agreed to buy that part back. Had a wonderful move in the stock this week. That's more importantly than the stock, though, are the mergers that are taking place. Nokia, which is a Finnish company from in Finland, agreed to be bought out by Microsoft, one of Ballmer's last major acquisitions as he's recently announced his retirement. kind of pending soon at Microsoft. So it's interesting to see some of this consolidation. We've talked about that for those of you who've been around a long time, about the S-curve of economics and things that happened in the automotive world in the 1920s. Well, telecommunications are clearly one of those similar type changes that have really occurred over the last 20 years, and how easy we're able to communicate, via the internet, via cell phones, tablets. So it's interesting watching these big companies, or what you would appear to be big. The Vodafone deal, third largest merger third largest acquisition in history, if everything goes as well and takes place. So big changes occurring there, and that's where you're going to really see what the segmented sectors that are out there, where there's going to be clear winners and clear losers moving forward. Doesn't always move as quickly as we'd like it to over a quarter or even sometimes a year in terms of market price, but it is taking place. Rules to live by. We always talk about the tax code that's out there. Remember, there's two, one for the informed and one for the uninformed. October 15th is coming. If you've done Roth conversions, we need to look at whether or not we need to do those recharacterizations or whether we want to keep them. We've got until October 15th to file that extension. But there's other opportunities that are out there, and we've got to make sure we pay attention to your tax return between now and the end of the year to see if there's anything that we can do to be proactive. We're more than happy to make the time for you to sit down, have a cup of coffee, and see if there's something that we can do to keep more money in your pocket, your account, than inside of the IRS. That includes harvesting losses, using stocks that are appreciated as gifts if you're able to itemize on your return. And don't forget, they brought back from for those of you that are over 70 and a half, required minimum distributions. You're able to use that money to go to a charity if you wish, as opposed to have to recognize it on your return. That's a huge opportunity for some of you that are out there. As always, if you're out and about on Saturday morning, don't forget to catch the radio show 9 to 10 on WQME. Sunday mornings 10 to 11 on Shine 99, and of course you can find our newspaper column now on Saturday mornings on the Anderson Herald Bulletin, but always on our website at yourlifeafterwork.com. If there's anything we can do to be of service, please don't hesitate to call. God bless. Have a great week. I look forward to seeing you all soon.